Hello, RBI Podcast. Greetings to David from listener number 349. I'm touched that you're counting. First off, I've listened since the first podcast, really enjoyed the content. A question for mailbag. We've talked about buying great companies. We've talked about when to sell. But my conundrum is, how does a rule breaker manage a rule-breaking portfolio? When does a rule breaker add? When does a rule breaker trim? Does a rule breaker dollar cost average? How much cash does a rule breaker keep in a portfolio? Goes on to say, from personal experience, I've had great success adding to positions when they drop in the short term by buying more shares of a company within the first year of my initial purchase when they've dipped due to a market-wide pullback. But longer term, I've had good success letting losers lose and adding to positions that have performed well and appreciated so long as the thesis is intact. Well, more questions than I can answer all at once. And it reminds me that maybe in an upcoming podcast, we should talk some more about portfolio management. It's one of those things that is very personal and very contextualized. There isn't a single cookie cutter approach or an emphatic answer I would give to any one of those questions that would work for everybody. So I weighed in very cautiously, and we'll give you a few thoughts here because I don't want to blow off a really good set of questions, but I also am the first to say that each of us has to know our own situation and make decisions for our portfolio accordingly. So, how does a rule breaker manage a rule-breaking portfolio? First of all, I manage a rule-breaking portfolio, several of them actually, because for my kids, etc., and I do it patiently. I tend to add stocks. I tend not to sell much. Over the course of time, as a net saver, I'm just adding more and more money to the market, and I'm diversifying my positions. A typical rule breaker portfolio that I would manage for a family member would probably have approximately 25 to 30 stocks. And when does a rule breaker add? When does a rule breaker trim? Well, I've kind of addressed this a little bit, and I've talked a lot about this in the podcast in our first year together, but I tend to add to my winners, not to my losers. And when do I trim? Very rarely. I am very willing, as a rule breaker, to allow positions to grow outsized, larger percentages than many people would be willing to. I've had stocks over the course of history in my portfolio that have been more than 20% of the whole portfolio, largely because I just allowed a winner, and we talked about some of our FANG scores earlier, just allowed a winner to win and win big. It also means that when those stocks give away value, like Netflix did dramatically a few years ago, it hurts a lot. And you have to be willing to accept that hurt. It's not an easy ride. It's kind of like riding a bucking bronco, which, by the way, I've never done. And I'm assuming most of us haven't, but on television it looks awfully dangerous. But it's not that different from what it's like to manage a rule breaker portfolio if you're allowing positions to grow to the sizes that the stocks are earning out there in the market over the course of time. And that is not for everybody. Finally, does a rule breaker dollar cost average, and how much cash does a rule breaker keep in a portfolio? I think dollar cost averaging is a wonderful approach. It's basically just mechanically adding funds to the market and into existing positions so that you're kind of averaging out your cost bases over time. And we've already talked about I tend to add to my winners, not to my losers, but even that is not a hard and fast rule. And how much cash does a rule breaker keep in a portfolio? I try to keep it to approximately 0%. I think having your money invested in the market at all times is going to end up maximizing your returns. Every percentage point you have sitting outside the market means it's not getting the 10% or so per year. Of course, some years the market loses 30%, and other years it goes up 40%. So in any given year, it might feel really good or not to have cash. But from my own standpoint, having it as close to 0% is highly optimal. That said, I will confess that for a while now, probably the last few years, I've had personally probably more like 10% in cash, but that's not because I'm worried about anything in the market. It's just that I'm so busy, I don't always get to invest. And also, I'm at the stage in life now where having a little bit more cash for children's tuitions and this sort of thing is helpful. But I am pretty much all in the market all the time. Thanks for a great question. I hope I gave some relevant answers. But I will mention again, before I move to the next one, those are personal replies and a personal approach. Knowing thyself, as was written on the Greek oracle at Delphi, the celebrated Greek oracle at Delphi thousands of years ago. Know thyself is so important, not just for investing, but for life.
As always, people on this program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. Learn more about rule breaker investing at rbi.fool.com.